Morning, it's 22nd of March. Welcome to Gold News Video. You can subscribe to this this channel on YouTube, or you can follow us on Twitter at Gold News Video. So gold today is at $1,612.42 right now. It reached an intraday high of $1,616.23 in the last 24 hours. Silver's at $29.08. It reached an intraday high of $29.30 yesterday. Just in pounds, those figures are for gold per ounce is £1,061.78, and for silver it's £19.11. So Cyprus Parliament is continuing to dominate the news. They're going to be voting on new legislation on Friday morning that will radically restructure the biggest banks. The decision expected to protect smaller depositors at Laiki, its second biggest bank, but those with over 100,000 will face possibility of large losses. This is what they're looking to vote on. MPs will consider legislation to give the power to impose capital controls, limiting cash transactions in Cyprus. This move has come after the European Central Bank set Cyprus a deadline of next Monday to find €6 billion to qualify for its bailout package. Fail, and the ECB would withdraw its emergency liquidity support. And then rumours are that Laiki was about to swept Cyprus. This led to more customers queuing at cashpoints to withdraw funds. Angry bank staff also held a demo near the Cypriot Parliament, demanding answers about their future, and there were scuffles with the police, but otherwise the protests were calm. Eurogroup said that they were ready to discuss a new proposal with Cyprus, and reiterated the importance of protecting savings up to 100,000. Also, what's happening is suppliers are only taking cash and not taking credit cards because they don't think that they're going to be good for anything. So they're hunting around the cash machines trying to get cash that's available. They're hunting cash as banks remain closed for the third day. Suppliers at gas station pharmacies are demanding the hard currency. There's a shortage of cash in the market. Kostas Georgialios, chairman of the Nicosia Chamber of Commerce and Industry, said containers are trapped at harbours and we can't get cargo through to customers because it must be done in cash and we can't get cash. Japan's stock has fallen amid the Cypriot deadline, and as the yen surged overnight. And then Cyprus Popular Bank has imposed a €260 per day limit on ATM withdrawals. Reuters reported this. US stock has suffered the biggest drop in nearly a month on the back of Cyprus, said Market Watch. US stocks slumped on Thursday, suffering their biggest drop in nearly a month, pressured by weak Eurozone economic data, escalating worries over the banking crisis in Cyprus, as well as disappointment with Oracle Corp's quarterly earnings. The Dow Jones Industrial Average closed down 90.24 points, or 0.6%, at 14,421.49, with 25 of its 30 components in the negative territory. The US House passed a $984 billion spending bill to avert the government shutdown. But this bill only covers funding for the next 6 months, but it means that some federal departments will get extra cash. And there's a story which I've posted below if you're watching on YouTube from The Guardian. I'm posting all of these stories more or less below, so just check down there. Daily Times, I think that might be in India, they gold firms on Fed's QE pledge, and also Cyprus's uncertainty. What else have we got here? Economic Times, gold silver slip on profit booking weak global cues, so that may be towards the end of yesterday. Gold giants shrink to fit as Paulson pushes breakup of commodities. This is a Bloomberg story which is quite in depth, so I'll post a link down below. Why silver could catch up with gold. Gold hits near 1 month high on Cyprus debt fears, and in the UK, next big retailer in the UK next warns of tough times ahead for UK retailers. And I think there's loads more stories about Cyprus, and rather than just go through them all here, I'm just going to post them below. So check them out below, and that's all for today. And have a good weekend, safe trading, and take financial advice before you buy any bullion. Thanks.